There are so many people leaving the state of California that now California politicians want to charge an exit tax for people moving out of the state. I'll explain why this outrageous proposal is not only offensive, but probably illegal, and how we're going to fight it. I'm Carl DeMaio, chairman of Reform California, and yes, in California, state politicians have invented something they call the exit tax. It would be charged to people who move out of the state, and it would actually, under this proposal, allow state politicians to tax someone who's moved out of the state for up to 10 years after they leave. This is outrageous, but it is a money grab. It's probably illegal, and we're going to cover all of that in this segment on the Reform California podcast. Let me just say right at the outset, the reason why people are leaving California is because of crazy ideas like the exit tax. Californians literally cannot afford to live here anymore. That's why most Californians are leaving the state. In fact, if you take a look at our cost of living versus the national average, we are 150 to more than 200% higher than the national average for basic cost of living expenses. Everything from housing to utilities to the price of gas to food, you name it. Our cost of living is higher. And a lot of that has to deal with the mandates, the regulations, and yes, the taxes. We have the highest property tax, the highest gas tax, the highest car tax, the highest sales tax, the highest income tax in the country. And they always are coming up with additional ways to add fees or charges or taxes onto the backs of working families in this state. We also have lousy public services. The schools are failing. The streets are filled with homeless. Crime has been increasing. The roads are falling apart. And this is no place to start a small business. Jobs are destroyed by the regulations, by the negligent approach of our politicians at the state and local levels. So there's good reason for a lot of people to flee the state. It's a beautiful state. The weather is wonderful. The people are amazing, but we are cursed by our government. So in the past 10 years, since 2014, we've had net migration out of the state. This is measured as the number of people moving in minus the number of people moving out. And there have been more people net moving out than moving in since 2014. And just in the past 2 to 3 years, we've had about 2 million people leave the state, and we've lost net 500,000 residents during that time. In the last census, California lost so much population that they lost a full congressional seat. The first time in its history as a state in the union that it lost a congressional seat because of declining population. So all the politicians are looking at that mass migration, people fleeing the state. And instead of seeing a problem that they need to address, that they need to fix the policies as to why those people fled in the first place, the politicians see dollar signs. They say, oh, look at all that money that's leaving the state. We can't let that happen. We need to see if we can impose a tax on everyone moving out. So let me tell you about this exit tax. I consider it basically like spousal support. So you have a marriage and the marriage dissolves, and one party in the marriage insists that the other party pay ongoing support payments, even though there's no marriage left. The exit tax is the politician's form of spousal support. And this is not something that we should allow. The proposal right now, and this has been a bill that's been introduced now 3 times in the last 3 legislative sessions. It's Assembly Bill 259, and it's been proposed by Progressive Democrat Assemblymember Alex Lee. And it would impose a wealth tax. Now, we've talked about wealth taxes before. A wealth tax is on your holdings, your stock, your bank account, your real property, your cars, your artwork, any tangible assets. Mainly we're talking about savings accounts and stock. This wealth tax would impose a 1.5% rake, a taking of the net worth of the individuals that are covered under the wealth tax. The exit tax would start out at taxing people 1.5% on $1 billion in January 2024. And you might say, oh, $1 billion, that's a lot of money. Hold on. They're coming for you, I guarantee it. Starting in 2026, the threshold of asset value would drop to $50 million and then go down to $30 million. It'd be a 1% annual tax on wealth. Billionaires would still be taxed at 1.5%. Now, even if you leave the state of California, the wealth tax would follow you. And so when you move out, there's a 10-year clawback provision in the bill. So you get taxed even after you leave, every single year. Now, you're going to say that I don't have $30 million or $50 million or $1 billion, so this doesn't apply to me. Once they open the door, the floodgates will be open and they will go and reduce every single year the exit tax threshold. I guarantee you. Soon it will be $1 million of assets. That used to be a lot of money, not so much anymore. And so just like the income tax started in the 1910s as only taxing the very highest earners, these Democrats, these progressives, always start something saying they're going after the rich, but very soon it comes and bites everybody because there's no limitation to their desire for our money. The concept here is the dangerous part. We cannot allow the state to pass a law to set up an exit tax, to validate an exit tax. That has to be stopped dead in its tracks. We can't say, oh, it's only for the rich, because it will be for you very soon. Now, the concept that they've come up with here basically is as follows. They claim that when you're in California, you invest and you're benefiting from the wonderful support that California gives investors and entrepreneurs. I know. I'm looking for the list of support that they give because I can't find it. But they say that if you accrue wealth while you're living in California, but you don't sell your stock or you don't sell your property, well, then the state, when you do sell that property, should get a piece of it because you built it while you were a resident of the state. And so therefore they should get a piece of the action. So many ways that this is wrong. First, I don't see California as helping people build wealth. They actually deter people from building wealth. Second, the way the system works is if you mistreat someone and they're angry and they decide to go somewhere else, well, that's your own fault. It's not the fault of that individual. They shouldn't have to pay you money because they chose to go to another state that respects them and treats them better. And finally, look, there is no justification for this. This is nothing more than a money grab. This would raise $21.6 billion in extra tax revenue in the first year alone. $21.6 billion. Now, I guarantee you, if the exit tax is implemented, you're going to have not only court challenges, but you're going to have people fleeing the state in droves. Not even people who are in the first rungs that they're going to implement. People will see the writing on the wall. They will flee. And what happens? California's income tax at that point will plummet. We're already seeing in net migration that we are trading more wealthy people who are leaving the state for poorer people who are coming because either they're too dumb to realize that California is not a great place to move to, or they see the very generous welfare benefits that are provided by California politicians. By the way, when you're looking at some of the other proposals on the exit tax, another proposal would begin to charge people based on their income. The original exit tax included provisions of a 1% on taxable income surcharge. It would be 1% levy on someone's income if they leave the state of California above $1 million. A 3% surcharge above $2 million, and a 3.5% surcharge above $5 million. That's on income. Again, the proposal that's in Assembly Bill 259 is an asset or a savings, a wealth tax that would follow you for up to 10 years. That other proposal is an income tax that would follow you from 3 to 5 years. Okay, so let's talk about a few things to oppose on this proposal. First, California does not deserve money when someone moves out of the state. Second, California already has the highest taxes in the country. We need to cut spending. Third, it is absolutely illegal. There are a number of legal challenges that will be brought to it. First, there is a violation of both the federal and state constitutional taking clause. The taking clauses in both the federal and state constitution says that private property may only be taken by government when government provides you with just compensation. And the taking clause has been construed to be protective of people. If the state comes along and says, we're going to take your assets, even a portion of it, the government must show a fairness standard and that there's a legitimate public interest. The courts have ruled that you can't take someone's property, even if you call it a tax, if you're bearing burdens for society that should be borne by the public at large. So this is a very extraordinary tax. You're taking someone's assets, a portion of their asset holdings from them in the form of a tax. The first thing would be the takings clause that they would have to satisfy. Second, there's a very clear violation of restricting the freedom of travel. Did you know that there's a freedom of travel that the courts have inferred from the Constitution? Again, an exit tax would be only allowed if the state could show a compelling interest to the general population and that it was fairly applied, that you weren't trying to penalize any one group for traveling across the state. Well, here they're going after people with assets. Someone doesn't have assets, they're allowed freedom of travel. Someone does have assets, they have to pay for the privilege. So restricting the freedom of travel would be a legal challenge. And finally, there are a number of legal challenges to this exit tax with the federal commerce and due process rights. You see, Congress has the power reserved to itself under the federal Constitution to regulate commerce among the states. In Complete Auto Transit versus Brady, a 1977 Supreme Court case, the court ruled that a tax on interstate commerce can only be sustained when the tax is applied to an activity with a substantial nexus with the taxing state, and that it's fairly apportioned. That it does not discriminate against interstate commerce, in this case, movement across the state of an individual, and that it's fairly related to the services provided by the state to the payer. Well, all of this is violated by an exit tax because there is no nexus to the state. The person doesn't live in their state anymore, but this state of California wants their money. And because the person doesn't live in their state anymore, there are no services being provided to that person. And clearly, you are discriminating against interstate travel, interstate commerce, because you are penalizing someone for moving out of the state. A second way to challenge us legally is under, again, the commerce and due process provisions of the Constitution. And that is a rule that prohibits multiple taxation. A state, quote, may not exact from interstate commerce more than the state's fair share. Now, this is a test established by the courts, and it says that a tax must be structured so that every state, if every state were to impose the identical tax, no multiple taxation would result. Well, suppose someone leaves the state of California, they start paying an exit tax to California. They move to Nevada. They find out that Nevada is infested by a bunch of liberal California refugees, and so they decide to move to Florida. Well, if Nevada also had an exit tax, then in theory, that individual would be paying an exit tax to Nevada and an exit tax to California. It would never end. It would be multiple forms of taxation. So the courts have said that that's not legitimate. If you apply a tax code in one state, you must assume that other states may also enact the same tax. And in the case of California, an exit tax, sure, other states will retaliate, by potentially imposing their own exit taxes. The good news for those other states is nobody wants to leave like they want to leave California. And finally, an exit tax fails the interstate commerce and due process rules because it's basically a discriminatory tax. It imposes a burden on out-of-state goods or activities, in other words, moving to another state, versus the competing goods and activities in the state of California. So if you stay in the state, you don't have to pay the tax. If you move to another state and engage in commerce, travel across state lines, then you are forced to pay that burden. And so on the face of this exit tax is illegal. Why are they doing it? Well, because California politicians have never been deterred by legality. Their view is, hey, let's pass this. Let's scare people. Let's keep them in the state. Let's keep our hostages in chains. That's what an exit tax, I believe, really represents. It's a Hail Mary pass legally to get money, but if they succeed, it presents a money source for them, a cash source. But they also are hoping maybe they succeed, and then it keeps people from moving out of the state. Now, something else on the exit tax I want to talk about, and that is we already have an informal exit tax. It occurs in California when someone decides to be clever. I know a lot of folks who've given up California because it's too expensive. They can't stomach living here, but they like to visit. They have family here. So what they do is they look at the rules and they say, I'm going to establish residency in another state, save money on my income tax, my business taxes, and the price or the savings will allow me to still go to California and spend a certain number of months in the state, enjoying the weather and enjoying my friends. Well, the state of California has a whole investigation bureaucracy that they use to go out and research how long you've been out of the state, whether you are members of country clubs in California, whether you have your dentist in California, your doctor. Oh, yeah, they will go through all your records because you know what? It's about the money, honey. They want money from you. And so they will do anything by hook or crook to try to bring a case against you that you actually are a California resident, even if you are living more than 6 months out of the state. And so I really warn folks that if you're going to leave California, you really got to leave California. If you're going to come back, it needs to be very clear that you're here as a tourist. You're here as simply a guest or a visitor, that you don't have long-standing or deep ties to the community. And I've heard of a lot of folks getting in trouble this way. And so their exit tax, it comes in the form of a tax penalty, fines, interest, and of course, a levy of state California taxes. And then, of course, they're really upset about that. So make sure you consult an attorney if you do flee California and decide you're going to be coming back, visiting and having a guest house here in the state. Now, look, we don't need to be worried about an exit tax because what we need to do is defeat this proposal, and we need to change California state government. We need to have some more rational approaches. We need to limit taxation. So at the Reform California campaign, we have a whole campaign underway to pass our California Taxpayer Protection Initiative. Go to the website stopcaliforniataxhikes.com. Stopcaliforniataxhikes.com. And on that website, it explains all of the tax increases, including the exit tax that we're fighting, and how our California Taxpayer Protection Initiative, which is on the November 2024 ballot, how it will invalidate and overturn any attempt to impose these taxes. It requires a 2/3 vote on tax increases at the local level, a majority vote statewide. It improves the way in which a ballot measure with a tax increase has to be presented on the ballot, so it's honest, that the ballot title includes the words tax increase in the title so voters know what they're voting on. It tightens the definition of what a fee is so that politicians can't use the word fee to get around tax rules. This is a game changer, but we need your help to pass it. Go to stopcaliforniataxhikes.com. Stopcaliforniataxhikes.com. Sign up as a volunteer. Contribute if you can. We are entirely grassroots funded. We can't fight the tax increases without some support and funding from grassroots supporters. So go to stopcaliforniataxhikes.com, help us stop the exit tax, help us stop the savings and the wealth tax, and let's get rid of some of these other tax increases that are causing people not to be able to afford to live here and cause them to move to other states. Until next time, this is Reform California with Carl DeMaio. Thanks for watching. Help us break through the censorship of the liberal media by liking this video, sharing it with your friends, and subscribe to my YouTube channel.